はい、皆さんこんにちは。私はマネックス証券のチーフ外国株コンサルタント、八子と岡本兵八郎です。本日は資金流入が非常に好調な投資信託、世界のベストを運用されるインベスコ社のスティーブン・アネスさんをお招きしまして、今年の振り返りや2024年の見通しなどをお伺いしたいと思います。アネスさんとは今年1月に対談を行っておりまして、今日は今年2回目の対談となります。それではぜひ最後までご覧ください。So Stephen, welcome back.
Thank you.
Time flies. It's been 10 months.
I know, it's amazing. Good to see you again.
Likewise. How are things?
They're good. Yeah, it's been busy. Been an interesting year, obviously, in markets. But yeah, a fascinating year as ever. How about things with you? Yeah, I hear you were in the Invesco office recently in
That's
Hong
right.
Kong.
Yes, I met the great people in Hong Kong, your Hong Kong office. I'm more than impressed
Excellent.
with
Well,
the talent you have there.
whenever you want to come to Henley, you come and see us.
So the last time I saw you back in January this year, since then I understand the sales of the Sekai no Best were very strong in Japan, and I understand that your fund has outperformed benchmark, which is MSCI World.
Yep.
And also you have something to talk about the Morningstar ranking.
I think are we 10th, I think, in the Morningstar rankings. I think over the last year out of around 412 funds, I think.
In Japan?
In Japan,
Mm-hmm.
yeah. So yeah, really pleased with the rankings. And I think what we're really pleased about is that market conditions in the last few years have obviously been quite volatile.
Right.
The market very different this year to last year in 2021. So I think what we're really pleased about is that we've been able to deliver consistently for clients through a quite volatile period.
So for the first time view of the program, basics of your fund, what makes Sekai no Best different from other funds available in Japan?
Yeah, I think there's a few things. I mean, perhaps if we start first of all with the fund versus the market, look, we're very different to the market. So we have a very high active share. So we have a 91% active share. So we're very different to the market.
Active share meaning?
Your difference to the benchmark. So if the benchmark is sort of
active versus
active
passive
versus active versus passive, so 91%, which is very high, and so you can see in the fund and the position sizes that the portfolio it's high conviction. So we'll often have big positions in companies that are very different to the benchmark. I think the other key thing is that we're very open-minded. You often find funds which are very prescriptive about what they do. They say we're always growth, or we're always value, or we're always quality. And we would say, look, we're actually quite open-minded about the kinds of companies that we're looking for. So we approach everything from a very bottom-up perspective. We want the single stock selection to be the key driver of performance ultimately, and I think that's one of the key differences, and therefore that's really the key driver of being able to deliver consistent returns through quite different market conditions.
So what are the reasons for your outperformance this year?
Well, mostly it's been driven by stock selection. So the portfolio is quite different to the market, and when you look at what's driven the overall market, it's those mega cap tech companies, the Magnificent Seven. Yep. We've been very different to that. We've had a number of different companies from a very sort of bottom-up stock selection perspective, which have driven performance. So companies such as 3i, which is a private equity business in the UK, has been a big performer for us. Broadcom in the US. A small European semi-cap company called BE Semiconductor. And so we've been able to find opportunities across different geographies and different industries. But it's really that stock-specific analysis that has we've been able to unearth what we felt were really undervalued companies, and that's been the key driver to performance. Look, I should also mention we have owned NVIDIA. We bought NVIDIA last summer. And so NVIDIA last year, there was a perception that the gaming business and the data center business were going to struggle. And NVIDIA got down to around $140 a share. And we felt that was a really good opportunity to buy an excellent business at a reasonable price. And so we invested in NVIDIA last summer, and then we sold it earlier this year when we felt that it was perhaps a little bit more fully valued. But look, still, it's a wonderful company. We'll keep an eye on it, and hopefully we can buy back into it at some point.
Can you please, for the benefit of the audience here, how you come up with an idea? How do you come to choose this one particular name, the
Yeah.
process.
Yeah. Okay. I'll try and cut this down very quickly.
Yeah.
Look, so we have a number of tools that we use from screening, from independent research, from meeting companies, from companies we've looked at in the past. So we have a number of ideas coming through into our investment process. We have then, over time, evolved our process to learn all of the lessons that I've learned over 20 years of my career. Where did we go wrong? Where did we tend to be successful? And so we focus on the areas we've been successful. And if something looks like a company that we got wrong in the past or has some of the qualities that caused us to have a problem with it, those are just immediately dismissed. So we then focus only on our best ideas, and we want to focus on companies that have a high degree of kind of quality and growth, so those businesses can grow organically, perhaps through M&A, and they allocate capital well. We want businesses that generate cash flow, and they can invest that cash flow, they can pay it back to us as a growing dividend. And also, we want companies which trade at an attractive price relative to their intrinsic worth. And markets are broadly efficient, I would argue, broadly. But there are always pockets of inefficiency. And our job is to find what is a relatively small subset of inefficiency and invest in those companies with high conviction. So the process is tailored to do exactly that. Take a large pool of companies, find what are attractive, growing, attractively valued businesses, and invest in those with conviction.
It's a science, but it's an art.
Yeah. There's science in the process in terms of the building models and discounted cash flows and valuation. But you're right. I think the art is in the portfolio management and putting the different companies together, different industries, geographies, where the risks are. Because often you don't want your biggest positions in the companies that you think you might make the most money from, because actually they may have a lot of risk attached. So, yeah, I think you're right. Managing risk and return is an art as well as a science. It's a real blend of the two. And I think it has to be a blend. You can't just do one.
Right. So, Stephen, you talked about the different composition of your portfolio relative to the benchmark, which is MSCI World. Can you please elaborate a little bit?
So the process, the investment process, is really around finding the best companies from a risk-adjusted standpoint that we can find. And so we do tend to invest with high conviction where we find those interesting opportunities. And so we are very different to the benchmark, as I said. So if you look at it from a geographic standpoint, actually we have a quite significant underweight to the US and a significant overweight to Europe and a reasonable overweight to Asia Pac generally. Now within that, I would say that actually we have a lot of companies listed in those areas that are still dollar earners as well. So we're not underweight to dollar revenue. Right. But if you look at some of the big positions in the company, in the portfolio, such as a 3i, which we think is a great business, huge runway for growth, was trading at a very attractive valuation. The same is true for Veralia, perhaps a bit less growth, but a very attractive valuation. It's a glass bottling company that has a very consolidated leadership position within certain areas. So they tend to operate as small local monopolies and duopolies. We also have a number of businesses such as KKR, which we think often is misunderstood by the market. It's seen as a quite cyclical financial, and actually we think it has a tremendous opportunity for growth and has demonstrated a very sort of high quality approach to its business and its industry over many years. So quite a different portfolio mix to the benchmark. But when you look at some of the valuations and the earnings growth that we've been able to put together, we've been able to buy companies at very attractive valuations, but which have been able to deliver significant earnings growth. And that's ultimately where we see our ability to generate returns for investors is buying attractively valued companies, which can then go on to grow and pay us attractive and growing dividends, which we obviously pay to our shareholders.
And what is the typical average holding period of these names?
Well, over the last, I would say, 15 years of my career, I've typically had a turnover rate of around 30%. So on average, holding period of around 3 years.
Is 30% high or relative to
I think it's relatively low. Relatively low. I would say, though, in the last 2 years, the market has moved around so much. If you think about how different the market was in 2021, 22 and 23, the opportunity set has changed a lot. And therefore our turnover rate has picked up a little bit because actually we're finding that the opportunities are changing quite quickly. And so we're having to be alert to that and that's slightly increased our turnover.
It seems that some people are concerned about the European economy more than the rest of the world. And your portfolio, obviously, you overweight Europe in your portfolio. So can you explain why you are overweighting European stocks?
Yeah, sure. I think it's a really important question because the European stock markets, and I include the UK in Europe here, they're very different to the economy. Actually, the correlation over the long term between the stock market and the economy has not been very significant in those regions. And that's because there are a huge amount of international dollar earning businesses listed in the UK and Europe.
Right.
And that's really where our interest is typically centered. And so I think that's the first thing to mention. The second thing would be that when you sort of dig into it a bit, you can always find interesting opportunities. And so if I look at the characteristics of some of the companies we own, we've been able to find companies that are on lower valuations than the overall market, the overall European market. But interestingly, if you look at them as an aggregate group, those companies are delivering earnings growth that is faster than the US market. So we've been able to find companies at a real discount, but actually where they're still generating very significant earnings growth.
It seems there's a perception that your exposure to artificial intelligence of the fund is lower because you sold NVIDIA. How do you respond to that?
Well, we did sell NVIDIA, absolutely. But I would say that NVIDIA is not the only company exposed to AI. Obviously, it is exposed, and it's become the sort of the North Star for AI investors. So look, we have a number of companies exposed to AI. I'd say Microsoft is one, where actually the software that they're developing and the artificial intelligence that's going into areas such as Copilot and the cloud business, that's really accelerating growth and will for a long time. We also have a significant position in Broadcom, where 25% of their business is directly exposed to artificial intelligence. We also own BE Semiconductor, which makes sort of advanced packaging for chips, back-end chips. So the more AI, more data, chips need to be faster, more powerful, better heat and cooling characteristics. And so BE Semiconductor plays into that exact theme. And then there are also other companies. So if I take a company such as RELX, which investors may or may not know, they own various sort of data sets to help professionals. So for example, they own a lot of data sets around legal case precedents. So if you're a lawyer, you can go to the RELX data set and you can find case precedents for cases which may go back 20, 30 years that help you in the case that you are battling. And so AI actually will help a company like that because they own the data set. Actually, rolling AI over the top of it will allow you to access that data set faster, and it will allow you to interrogate that data set in a more sort of insightful way automatically. And I think that is really powerful for companies like RELX, where it should actually accelerate the growth of the business. So I think that we're still in the early stages of AI. It's very obvious that NVIDIA is a beneficiary, but I think as we look a bit further out, there are lots of companies that will benefit from this. Clearly, you need to be careful. There will probably be companies where there are risks as well.
Right. So the fund is named 世界のベスト best of the world. And you said you have I'm sure there are several themes. One is obviously the artificial intelligence was a theme in the fund, per your explanation. What are the themes you think that exist in this portfolio of stocks?
Well, look, I think in many ways we want to avoid too many themes. So we want the portfolio to work driven by stock selection. So we work very hard to reduce the correlation within the portfolio to make sure that the fund isn't too exposed to factors or to certain thematic biases. Because if you're wrong on those themes or those factors, that can be quite costly to performance. And so if I think about, for many investors will say, I have a view on interest rates and I'm going to build a portfolio based on my view of interest rates. And that, if you're wrong, could be very dangerous. So we don't tend to do that. We try to avoid thematics and avoid biases and make sure that there are a number of very idiosyncratic bets within the portfolio that will allow us to perform in different market conditions.
Stephen, can you discuss your investment in Japanese names?
Yeah. Look, so we are underweight Japan at the moment. We have in the past found a number of companies that we have been interested in, and we bought earlier this year, for instance, we bought Asahi, which we felt was, a really good company, good brand, and there were a number of changes going on in the Japanese beer market that were quite supportive for the company. We felt that with the attractive dividend yield, good balance sheet, and critically for us, a very attractive valuation at the time, and that's performed well. Look, I think there are some interesting debates to be had about the Japanese equity market. Whether the reforms will in fact drive perhaps the change that people may want. That's, I think, an interesting debate and something that we want to see play out a bit further. Look, there are some wonderful companies in Japan, clearly, that have technology leadership, great corporate governance, and unbelievably strong market positions in the markets that they're in. Often, though, we find that those companies have quite a premium valuation attached to them, deservedly so. They're very good businesses. I think the challenge we have is when we look at some of the undervalued companies, perhaps you don't get the capital efficiency that you might want or the focus on ROE. So I think if there can be an improvement in some of those areas for businesses, that would be great news, I think, for us as stock pickers.
So how do you think the next year's market is going to be?
I think we're in a period of time now where we've begun to see inflation rollover, but obviously we still have rates at relatively high levels. My own view is that rates are at or near peak, and so I would expect rates to come down from here. I think that should be supportive generally for equities, but I would say that recent results from companies would suggest that the macro environment is still tough. So we're sort of proceeding with caution, if you will. And so I think we may well get some volatility around inflation changes, policy changes on the back of that. And I think perhaps corporate earnings, we have to be very careful if the macro environment is tough, that we have conservative expectations for companies in that environment. I think it's also worth saying that in the post-COVID world, we've definitely seen very strange sort of restocking and destocking behavior. And therefore, I think that there isn't just one overall cycle that's going to impact companies. I think each industry almost has a little mini cycle within it. And so I think that's going to be a really interesting dynamic for active stock pickers to try and take advantage of, because I think there'll be a strange sort of period of quite messy news flow, if that makes sense. And so I think being able to be active and take advantage of those opportunities. So I think it'll be an interesting year as ever. I think a little bit more volatility, but that's something that perhaps all of us need to get used to. What do you think about next year? I'd love to get your perspective.
Well, to make a long story short, I also do believe that the rate perhaps has peaked, and that the rate coming down should be supportive of the stock markets in general. And also, I'm talking about the U.S. market. And the corporate earnings this year is a little negative, but next year, the year after, it's going to be double-digit earnings expected. I feel comfortable next year's market will be. And also the fact that the people are so negative, the sentiment of investors for the U.S. market, and also the positioning of stock index futures still negative, which is a good. If you take a contrarian perspective, that's a good indication of what's happening. So in general, I'm positive as well, and I do believe that the index level will be higher end of next year than the current index level. So finally, Stephen, do you have a message for Japanese investors?
Yeah, well, look, I think one of the key things I would say is that equities have always been a great protector and generator of real wealth, i.e. protect against inflation. And I think we are in an environment where inflation may be a bit higher going forward. So I think equities are a good place to be invested. However, what I would say is you need to invest with a long-term time horizon. So ignore the week-to-week, month-to-month volatility,
or daily stock movement.
Daily even, yeah. Look, we'll deal with that. Look, volatility can be quite difficult to deal with, so just ignore it and focus on the long term, and that's where you get the real compounding benefit of being invested in equities. And finally, look, I'd just like to say a massive thank you to all of our Japanese investors. We're delighted with the support for the fund, and really looking forward to coming back and seeing you early in 2024.
Thank you, Stephen.
Thank you very much. Good to see you.
Do come back.
Oh, absolutely, definitely. And you come to Henley.
Okay. はい、今回ご紹介しましたインベスコの世界のベストですが、時期によってはですね、S&P500 指数をアウトパフォームしていまして、非常にいいアクティブファンドではないかというふうに考えています。世界株式に厳選投資を行っていまして、成長プラス配当プラス割安を追求しているファンドであるということであります。これまでに20年の運用実績があるファンドですけれども、今後のですねパフォーマンスも非常に楽しみなファンドだと思います。皆さんの外国株のポートフォリオの一部にですね、加えることをご検討されてはいかがでしょうか。